So it is now 11 a.m. and we can begin. My name is Laurits Kjærgaard, Equity Analyst at ABG Copenhagen office. It's my pleasure to introduce Green Mobility, represented by IR and Head of Strategy Anders Wall. To the participants, we have research on our introduced platform, which you have free access to. But without further ado, thank you very much, Anders, for joining us today and for your time. The floor is yours.
Thank you very much, Laurits, and welcome everyone. Welcome to Green Mobility. We are broadcasting this from our home city of Copenhagen, and as it says on the screen, the greenest mobility provider. We emphasize very much on the green part of our business. It has been a natural part of Green Mobility since even before our launch. It's very much part of our DNA. Green Mobility is a car sharing company. We operate entirely by EV, electric vehicles, which is the green part of the business. Naturally, it also comes when we look at the energy that we put into our cars. As Laura says, my name is Anders Wall. I'm head of investor relations here at Green Mobility, ESG, and our strategy focus as well. And I will give you an introduction to Green Mobility. Next slide, please. From the beginning of Green Mobility, we were focusing on three megatrends. They are still to this day, very much what we base our business on. It is urbanization, that we are all moving into bigger cities. We are bringing along 1, 2, maybe even 3 cars, and it's causing obvious problems, such as traffic jams, parking issues, noise, and of course, obviously, a lot of environmental problems. Secondly, it is sustainability versus urbanization, maybe a bit more positive trend, but still the trend that focuses very much, and we have to act. We have to act now. We have to do something. That is the core of our business today. The last part of our megatrends is, of course, the sharing economy. That is what enables us to actually do what we do. When we look at cities, which is where Green Mobility operates, there is a clear political focus on, one, saving CO2 emissions, but also reducing private cars. These are two of the main elements that we work with in our business and where we engage directly with cities and politicians. We've been able to prove not only that we can actually save CO2 emissions, but we can also reduce private cars. And when we look at cities, this is where they have had a huge transition from just 3-4 years ago, where it was I would almost say a nice to have thing, to now it's become top priority in most cities to actually do something about mobility. Next slide, please. Our business is basically very simple. It's something that we focus on keeping it that simple, because then it's very easy for people to understand. And ultimately, what we're working with is changing people's habits. So we have to motivate you to do something differently today than you did yesterday. And when it comes to our cars, most people tend to be very clinging to their cars. It is comfortable that you know how the seat is adjusted, the radio stations, all that. So we have to make a very easy alternative for you actually to change your habits. So obviously, as I said in the beginning, we are a green business, so that goes without saying. We work on keeping it very intuitive in our app, so you can simply find the cars and use one, reserve it, and book it for your ride. We have a number of product structures in terms of pricing, whether you go by the minute, hour, or day. And then we also focus very much on keeping the infrastructure, so parking and charging, very simple. Again, so there's no hassles in what you're doing. Next slide, please. Our backend solution is based on from our headquarters here in Copenhagen, where we have customer service, but we are also very active in the streets. So we have our own street crew to take care of the cars, making sure that they're cleaned, they're charged. You don't necessarily have to do that as a customer. All things that are supporting the fact of creating a simple business. It's very intuitive to use. As part of our business, naturally, we gather a lot of data. We use that for operating the business every day, so down to positioning the cars, finding where should we ideally have the fleet Tuesday afternoon versus Sunday morning, and so on. So make sure that we have availability in the fleet. That is ultimately a key point as well, because when you as a customer are looking for going anywhere, It needs to be very accessible, so availability is key. Generally, you don't want to walk more than 3, 4, maximum 500 meters. So that's our primary task in our operational center, to make sure, based on our data, that we know where the cars are positioned. Naturally, we use data as well to develop the business. We can analyze a lot of behaviors in our data from what is needed, but also based on other input that we get from our customers. So we continuously develop the platform. And a few examples of that, if you take next slide, please. We started just last year, we developed a pre-book functionality, realizing that there are situations where you may not have the time to wait to find a car or go to that car. You need to catch a plane and important meetings, then you can actually pre-book our cars now. We will deliver it to your doorstep. On a slightly different profile, we also saw an increased need for transporting larger goods. So we've added electric cargo vans to our fleet, and they actually seem to be even more popular than traditional cars. So there's a use case that is definitely supported with these cargo vans. The last part are our packages. Since day one, we've had various packages for hourly usage and so on, where you get a discount. But there's also a need for people to go further, specifically in the weekends, where we have low usage in the city. So last summer, we introduced day packages where you can have the car for up to 7 days. And as you can see from the map, depending on how familiar you are with Copenhagen and Sjælland, all of a sudden during the summertime, we saw the fleet moving a lot out of Copenhagen. So there's definitely a need for shared mobility also for the longer distances. Next slide, please. The business model of Grenability is to a large extent very simple. We go into a new city, we can predict the cost of that city in terms of leasing of the cars, parking fees, if that's relevant, insurance, labor costs, and so on. So that's the green line you see on the slide. It will grow a little in the beginning, but over time it will fade, mainly due to expected lower cost on EVs as they develop in the market as well. As with any other business, when you start in day one, you have zero revenue. It's not unlike opening a clothes store around the corner. So we build up that revenue. We look at our business on a city by city perspective. So this is the illustration of a city that we launch, where we can actually measure the cost and also the revenue per car. So it becomes a very simple KPI to follow. On average, we expect to spend 2 to 3 million euro to make a city break even, and do that within a 2 to 3 year time span. We've seen that in similar cities, and we see that as a very realistic time. There are, of course, cities where unique things may impact this. We see some countries at the moment where we have large subsidies on EVs that will, of course, lower cost, bringing in a break even even sooner. Jump to the next slide, please. An integral part of our business is, of course, also that we are a green business. We have a thorough ESG program, and we also work very closely with UN Sustainable Development Goals. And it is about contributing to the city and also engaging with the city on a political level. Some of the most obvious and very clear measures to do that is, of course, on CO2. So over time, we've saved more than 2,000 tons of CO2 by using our fleet. Likewise, we also measure the number of private cars replaced. And today it's on a factor of 1 to 4, meaning for every car we have on the street, we actually replace 4 private cars. Jumping to the next slide, please. A little overview on green mobility and our current locations. As you will see by the dark green dots, we are currently operating in 7 cities across 4 countries. So Denmark, Copenhagen and Aarhus, Sweden is Malmö and Gothenburg, Helsinki in Finland, and then Antwerp and Ghent in Belgium. You also see some light green dots. These are what we call announced cities. So cities that we are planning to move into. So in this case, it's Oslo, it's Brussels and Vienna. We've also announced that we've established a subsidiary in Germany, obviously to go into the German market, which is traditionally also a matured car share market. with some strong large cities. Across those cities, we operate a fleet of a little more than 950 EVs today, and currently more than 115,000 customers that we service across these markets. And if we jump to the next slide, please. Here you see an illustration of our development over time, and naturally, like many other companies, we were affected by COVID when it hit us about a year ago. But the interesting part is when we look at it from a historical perspective over a longer time span, we've actually had a very impressive growth, and it continues to grow. Naturally, with some dips last year, but from the initial sort of shell shock that we saw in the spring, we quickly rebounded in the business and actually grew throughout the fall, having record high numbers. This is illustration of Copenhagen, which is our most mature city and also where we have the historical data. So this is based on just one city, and which is also what makes it comparable over time. So the development over time, naturally, at one point, we would expect that it fades out, but tripwise it continues to grow, and we see a similar development in our other cities. So the development, if we jump to the next slide, please. The development last year led us to be able to announce profitability in Copenhagen in August of last year, and doing that as the first fully EV operator. I think that was definitely a huge milestone for Grenability. Was something that we had anticipated naturally, but with a little delay due to COVID. But equally an important milestone for car sharing in general. That it is a business that will be profitable. It does take a few years to build up a new city, but I think it's not unlike most businesses. You have to build this up. We've proven that the business works and the business model is sustainable. For us now, it comes down to building additional cities and growing the business. The developments that we've done over time in Copenhagen naturally can be implemented directly into our new cities, giving them the benefit of learning or of acquiring things from Copenhagen. Copenhagen has over time been sort of where we've developed things, we've adjusted our platform. So now it's very easy to roll out in new cities, which also makes it quite scalable for us because we have a set formula now for entering new cities. We know what we need to analyze before going in. We also know how to quickly start up a new business. So, which also leads us to expect that new cities, actually depending a little on size and so on, but that they will become profitable sooner than what we originally saw in Copenhagen, simply based on all the advances that we can bring to that business. If we jump to next slide, scale is what Grenability is all about. We need to continue to grow as a business in order to become a leading operator in Europe. We could start the business today and say, okay, with the 7 cities that we're in, we could most likely create a good and strong business, but we would end up just being a regional player. For us, the aspiration is to become a leading operator in Europe, and by that also having a lot of cities around. It is a land grabbing exercise for us. We need to go out and plant the flags of Grenability in European cities. The map is to some extent illustrative. Whether we will hit these exact spots will remain to be seen. But one of the big differences that we've seen is when we started our service 4 years ago, we were looking at cities traditionally with 1 million plus inhabitants. Now we've proven the business is sustainable in smaller cities down to 250,000. Naturally, this hugely increases the amount of cities that we can expand our service to. More than 160 cities across Europe fits this criteria. I'm not sure we're going to do all 160 cities, but it gives us a lot of room to maneuver and a lot of potential cities to work in. We are not the only one to operate in this field, but interestingly enough, at the moment, having more than one operator is not necessarily a negative thing. Again, coming back to the availability, if you have more than one operator, you will see more cars in the streets, and then more and more people will actually change habits into shared mobility. So it's also a factor that we look at, having cities where potentially we have strong competitors as well. I think the biggest part we see today is that, and this has to be in cities where we have political support, and luckily this has changed dramatically as well. Most cities across Europe are now looking to change actively in mobility to reach their CO2 goals, whether it's for 2025, 2030, and we can contribute actively into this. If we jump to the next slide, one of the ways that we do this is the structure that we work with. So we have what we call a hub and satellite structure, where specific cities act as a hub for other cities. Good example is in Scandinavia, where Copenhagen acts as a hub, meaning this is where we have our customer center. So all customers, despite where they are, in which city in Scandinavia, when they call our customer service, they reach Copenhagen. We don't necessarily need to have a lot of offices around the city, the individual cities that we're in. We do, however, of course, have a local street team that makes sure that the cars are serviced, that they are charged, and they're positioned right, and all that. So it is about scale, and this is where our hub structure works very well. If we jump to the next slide, please. This is also leading into the ambitions that we have as a company. From our current 7 cities, our aspirations is to go to 35 cities by 2025. And by that, we would become one of the leading operators in Europe. And it's merely just a matter of opening 5 to 6 cities every year. It's the same pace that we grew the business with last year. So it's absolutely realistic. And with that, we would bring more than 10,000 EVs. And of course, saving a lot of CO2 and replacing private cars, equally important measure for us and the cities that we are in. And with that, I conclude my short introduction to green mobility. I think we can jump to the last slide.
Super. Thank you very much, Anders. Maybe a few questions from my side. The first question is in terms of, you've obviously done a few share missions to fund your journey. Copenhagen is in profit territory now, but it takes some time until the cities can also organically have enough profit to grow new cities. So perhaps, or you are perhaps leading the way in terms of new share missions in the next couple of years. Could you give some details to how you're thinking about raising new capital to fund your journey?
Sure. As you sort of introduced and was what I was talking about before as well, in the pace that we want to grow cities, it will go faster than the time it takes us to make cities profitable. So we will need additional capital. We've been open about that as well. And I expect that we will raise capital at a number of times in the coming years, simply to fund this expansion. It may also be in terms of other sources of financing, but we like to sort of do it in step approach. So we generate some results. We can show clearly to our investors, now we've reached this level. We'll raise additional funds. We'll take the next part of the journey.
So not one big share mission, but perhaps a few $100 million from time to time to fund the journey.
I think it's always dangerous to put an amount on it when we haven't announced anything. But I see a bigger value for everyone in doing several tranches rather than doing one big. And it has to reflect also what we would need in the specific timing. We don't necessarily need a lot of money sitting on a bank account. It has to go into generating new cities and thereby growth in our business.
Okay, and if we talk about today, you have 950 EVs targeting around 10,000 by 2025. How many are currently being ordered? Could you talk about that? And maybe even, how fast does it take for you to say to order new vehicles for a new city?
At the moment, we see a lot of difference from OEM to OEM. As you can maybe see from some of the pictures, we work primarily with Renault today. And the interesting and flexible part of our business is that where we 3-4 years ago only had very few EVs to choose from, Now we have a multitude of EVs, and I think it's about 35 new models coming to the market this year. And naturally, these OEMs are very eager to promote the new cars coming in, and thereby also producing. The specific lead time varies a lot at the moment, also depending on COVID, of course. But I don't foresee any big issue in actually getting cars for the expansion plans that we have.
So, how long does it take for you today to order, for example, 100 EVs from Renault?
For us to order it goes. We can do that quickly, but delivery time, of course, it can vary. And I don't want to hold Renault to anything sitting right now, but I would expect a couple of months.
A couple of months. And now, obviously, you mentioned in regards to your statement here on the 29th of January that you are opening a subsidiary in Germany, looking at that to be the next country to be involved with. Could you highlight maybe some of the cities which are relevant for green mobility to look at? And I guess it's also plausible that perhaps you order EVs from a German manufacturer.
I think everything is plausible. The benefit for us is that we have choices. We didn't have that 3 years ago. We have that now, and we ongoingly evaluate a number of cars. That's the fun part of what we do, that we can test ride a lot of cars. But you're right, we are looking at Germany. We are looking at a number of cities, primarily larger cities to begin with, because then it's easier to move into smaller cities. Whether it'll be Hamburg, Berlin, or other cities, we haven't announced that yet. But the obvious is to start in a larger city. And timing will, of course, constantly be reflect this against COVID. We don't want to put cars on the street that aren't moving. It needs to make sense at the moment. But we're seeing that things are clearing up in Germany as well. So we're hopeful to be able to launch that in the coming months as well.
And in terms of the customer support center, will that be from Belgium to Germany, or from?
It's not. We haven't decided that yet, but we could actually run it from Belgium as well. But it's also we could also end up having a German-speaking customer center somewhere. But I think likely we'll start in small scale and then we'll ramp it up as more cities are added. But it's not decided yet.
Okay. Maybe another question in terms of 2020, the COVID-19 impact was obviously quite harsh for you because there was lockdowns in the cities, not a lot of people commuting to work. But then you experienced throughout the summer of 2020 that there was more flexible use of your cars, that people were traveling around Denmark to summer houses and vacation houses, etc. I know that you're coming out with your Q4 report here in a few weeks with a guidance on 2021, so I don't want you to guide, obviously. But could you talk about maybe some of the considerations that you have for summer of 2021?
I think we potentially look at having the best of both worlds, because what we saw last year when people stopped traveling, we lost a lot of our business going to and from the airport, which was a traditional good part of the business, but then it shifted into a different mode. Likewise for nightlife, school traffic, and so on, so university traffic, it has simply moved into different categories. So assuming that we would all go back to what we used to and everyone will be traveling this summer, I would expect that we simply at more or less back to what we had before. But remembering we've generated a lot of new customers throughout the second half of last year. So we will ultimately still have a larger business business foundation to work from. So I think we can adapt and work with this fading back to some kind of normality, because shared mobility is needed regardless of the sort of societal status.
Okay, and in terms of maybe the guidance, could you perhaps talk about which KPIs you will be introducing in your Q4 report? Is it number of cities, is it revenue, is it earnings, or how do you think about that?
For as a growth company, cities and vehicles are still main drivers. Naturally, we will have guidance on revenue and profit loss as well. But I think for now, it is about generating that growth that will generate the coming financial terms. But all of them will be part of our guidance.
Super. And maybe one last question. You talked about, some of the hubs that you're introducing. We talked about, Belgium. Vienna is also coming online in 2021, I guess, and that's also becoming a hub, as I understand it. What other countries are relevant for Greenability? You've mentioned UK before. You've mentioned, I guess, the southern part of Germany, maybe even southern France. Are these some of the areas that you're looking at? Is exclusively EU, or how does that work?
Well, you mentioned a lot of areas, and I think more than we would realistically be able to cover in 21. But we've already announced that we also want to return to Oslo. So Norway is obviously a market. Existing markets, Belgium is obvious to look at additional cities, just as Brussels, Germany, Austria. I think that's a good start of next year. But obviously, we constantly monitor and evaluate a number of cities across Europe.
You obviously have a number of competitors which are also owned by the car manufacturers. Is that a huge advantage for them versus Greenability, or do you see, a niche market for you to operate in?
Not from our perspective. I think it's not. Obviously, you have a strength with an OEM as your owner, but it can also carry a sort of a flip side that we've seen during the last year, that the OEMs naturally focus on their main business, the production sites, and less on what I would call their new ventures. So whereas we've been able to focus entirely on our shared business. So I think it's you have plus and minuses in it, and we don't see a bigger risk from an OEM-owned car sharer than any other car sharer.
Super. Thank you very much for your time, Anders. To all the participants, you are welcome to research and introduce or reach out to Anders. He's always happy to talk to new investors. So thank you very much, Anders, and have a great day to you and everyone else on the call. Enjoy the seminar.
Thank you all.